I want to go ahead and react to that, kind of share my opinions and perspectives about what Tom Lee's talking about there. Mark Cuban, on the other hand, says he's in cash and wasn't buying the dip yesterday. So I'm looking really forward to reacting to that and why Mark Cuban was not buying. And then the last one we'll react to here is Gene Munster. DeepSeek's innovation is real, but AI spending is still on track. So looking forward to hearing his perspectives on the whole tech space. He covers the tech space very well. So looking forward to hearing his thoughts and opinions on that. Appreciate y'all joining me as always. All I need from you guys, one thing only. Do it. Takes 1 second out of your day. Just go down there and hit that like button on this video here today, please. And then if you want to subscribe to the channel, you can certainly subscribe. We are approaching 75,000 subscribers here in the reaction channel now at this point in time. So appreciate y'all for being here. Additionally, if you're looking for access to all of my best course curriculums, my entire life comments may not happen, but let's just say hypothetically that happens. Why don't I care, right? Here's the deal. Tesla is a super volatile stock. Like I just showed you here over the past 5 years, these were all insane volatile moves. It's not like these were small moves. These were all monumental moves for Tesla just in the past 5 years. Like Tesla's just a volatile stock. So if Tesla's up 20% tomorrow, down 20%, up 5%, down 5%, it really doesn't matter at all to me. Like that's just what I come to expect being a Tesla shareholder, right? Tesla stock could have a drawdown all the way to here, and I wouldn't be surprised. It could skyrocket higher. I wouldn't be surprised. Like nothing surprised me with Tesla stock. Once you've been an investor in that company year after year for many years, you come to just expect wildness from that stock. That's just what it is, right? Meta.
Let's take a minute to actually look at the Tesla stock right now. Okay, so looking at this, there's a lot going on here. A lot going on. First, we had this big run, right? We had this big run from October to it ended. I would say the day it ended was December 20th. Now, how do I know that this ended right here? Well, first you've got your trend template. You've got your 10 over the 20, price over the 50. That's your outlier trend template, right? It's math. When that is pointing upward, when that's pointing north, that's in a bullish trend right there, right? But the first day it really closed under it, which was your big red light right there, was December 20th. And this is my go-to. Anytime it closes under the 10, I want to get out. And after it hit that day, that order block probably was created on that day or the day after, because it take a few days to develop here. And what has happened since that point, right? If you're following the outlier trend template, which is super easy, as you can see, 10 over the 20, price over the 50. And when it closed under the 10, at that point, it's gone sideways. And then here's a great example of why order blocks matter. You've got it right here that was created on December 16th. And then first time it came in, rejected. Second time it came in, rejected. And now it's created even a second order block right here. So I would actually see this trend right here be going sideways, which we've got the 10 is under the 20, price is over the 50. So this is a sideways trend right now, and a sideways trend with two overhead order blocks, two overhead resistance points right here that are going to be difficult to get over. So I own a Tesla vehicle. I own a Tesla Model Y Performance, and I love it. We're coming into earnings right now. I don't know which way earnings are going to go, but I'll tell you right now, investors, traders are looking at this and they're saying, I'm not sure I want to I'm not sure I want to own this, right? Because earnings can be a crapshoot. Earnings can go way up, earnings can go way down. But right now, what I see is a sideways trend with a lot of overhead resistance. So for those of you who don't know me, my name is Christopher Yuill. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And this is where we save time, make money, and start winning with less risk together as a team. So we'll continue on with this video of the day. But of course, be sure to stick around to see how we rank this out of 10 and subscribe if you haven't already.
Massive position for me. Why am I not even scared? I have 0% anxiety or fear about, what's going to happen with Meta earnings here? What's the stock price going to do? And here's why. The reason being is the stock is on its way to $1,000 in the next 24 months.
Okay, so now let's go take a look at Meta. And wow, Meta is in a crazy uptrend. Now, this is what I like to see. Okay, so Meta is going to have earnings here in a day or two, right? This is a trade I would have loved to have made. I didn't make this trade, but I would have loved to have made it. And here's why. You've got your 10, 20, 50 all pointing north. You've got your order block down there as support, right? So anytime it's come back into this order block, right? It was made on December 20th. It came out, bounced, gone, right? So that is a great example of how order blocks work right there. You can see it right there on the chart. And I love to trade up into earnings. I won't trade at earnings unless I have so much profit room, so much, so much profit built up here that I have no stress. But man, Meta is looking really, really strong. Actually, what I want to do real quick is I want to go into the OVTLYR dashboard. I want to look at 2 stocks. I want to look at Meta on their I want to look at their buy signal, and I want to look at their heat map. And then let's also do the same for Tesla. So the heat map is going to show us how much fear and greed is in these particular stocks. And once that fear or once that greed gets at a really high level, I always look for it to snap back. So we did get a buy signal on Meta on January 28th. So on yesterday's candle, right? On this candle right here was where we got that buy signal. Now, like I say, it's leading up into earnings, so earnings can be a crapshoot, right? You saw SoFi recently had blowout earnings numbers, yet their stock is down like 16% from that point. So if we go back to Meta real quick, looking at this, I love to trade up into earnings. This is a great trade I would have loved to have made. You can see the fear wasn't all that fearful. We were greedy around, day was that, December 18th. The greed came out, and as the stock went sideways for a while, the fear came in. It was just a really tiny bit of fear, and has now started to come right back up into the greediness. And that's what you want to see, right? When you're getting into a stock, you want people to be greedy, right? You want to have this situation occur. I started saving this because I can use this more often, right? This is what happens when people get more and more greedy, right? You see this sell, 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 or buy, buy, buy. People get more greedy, more fearful. And this is human psychology shown right here on the chart. Now let's go over to a Tesla stock real quick. So Tesla got a buy signal right during this big move right here, right? December 12th, we got that buy signal. Let's go back to Tesla. December 12th was this candle here, right? So could have made a little bit of money on it, but it's basically gone sideways since then. But let's also take a look at the fear and greed map here, right? As you can see right here, this is what we want to see. We want to see that greediness coming into the stock. Now it reached a pretty high level of greed, reached a greed of 31. Now we go from 0 to 50 on greed and 0 to 50 on fear. And it started at 17 and ran up to 31 really quick and then started going sideways. So that would have been an exit signal for me once it started to go sideways and the greed had peaked out right there. But you know what? Following these signals has been crazy with Tesla 602% versus buy and hold at 275. So pretty outrageous signals right there. So let's go back to the video here.
Regardless of whatever happens tomorrow. And the reason being, you know, I love to run projections on my companies, right? This is a realistic projection I have for Meta stock over the next number of years. I have them averaging 17% revenue.
Okay. To his point, he's got a couple targets circled here. Share price low to share price high. 2026, his target is between 919 and 1149, it looks like. 2028, 1324 and 1655. I mention this all the time. Having targets like this, I think, is a very poor way to manage your money. Now, what do I mean? Right. Let's say that his first target is hit. Let's say it's 919 in the next 2026, he says, right? So let's circle what 919 would look like on the chart up here. So that would be right around here. And then that's how much of a gain to get up there. A 33% gain, that's not that big of a gain. I thought it would be more. But having a target on your trades, I think, is a difficult situation to put yourself into. Because imagine that Meta doesn't go up to 919. Imagine that Meta gets earnings and just gets absolutely crushed, right? Down 40% or so at this point. Are you still going to hold on, hoping and praying that it comes up and hits that target that you established? I don't know about that, right? I think you need to be looking risk first instead of profit target first. When you look at risk first, you look at where the stock is today and you say, if this doesn't work out, where am I going to get out? Tom Basso, one of the market wizards that I worked with, his deal is that you can buy any stock on any day. It doesn't matter. All that matters is knowing where you get out. And where you get out is so much more important than where you get in. I know that sounds crazy, right? Oh, you got to get the perfect buy signal. Well, not really. You don't have to get the perfect buy signal. What you have to do is execute the perfect exit signal. Okay. So for example, if Meta stock price is at 275 right now, maybe you give it $5 to find out if it's going to work, right? Maybe you give it a $5 trailing stop. So for every $5 it moves up, you can trail that stop behind it, right? Let's say if it moves up to 680, your stop out point is now at 675, right? And just move it up along the way. Or you can do something like a moving average, right? A moving average will do that for you. It'll show you how much room you've got to that moving average. So in this case, it's a 5% decline. It's a $36, which is huge, a $36 move, which I would absolutely not give that much room for a stop loss. A $36 move, give me a break. But you could do something like that and then let it run as far as it can, right? And in fact, the better time to get in and start using moving average for getting stopped out. It's when it's closer. Like this one right here is a $10 move down, a 1.6% move. That's a lot tighter stop. And I'm all about tighter stops, right? In fact, the only way that you survive in this game is by making sure that you don't lose. I mean, you can have win rates that are 30% win rates, right? You don't need to hit a home run every single time. All you got to do is make sure you keep your stops really tight. And David Ryan, another market wizard. I did not work with David Ryan, but one of his things is like, imagine that you've got your horses are starting at the starting gate, right? And they all are lined up, and they shoot the gun to start the race, and all the horses take off, right? All the horses are going. That's your stocks. All the horses are going, except for yours. Yours is not only decided to come out a little bit, but it also decided to stop, and it's decided to back up, right? That would be the equivalent of a stock that you bought. Instead of going like you wanted to, instead of going because only price pays, instead of going and let the price go up, stopping and turning around and coming back. That's not the horse you want in the race, right? So use that analogy whenever you're picking stocks. I can buy anything, and I'm going to give it so much room to figure out if it's going to work. But if it doesn't work, I need to have the most paper hands ever, because only price pays at the end of the day.
Revenue growth from 2025 to 2028. That's a pretty realistic assumption in my personal opinion. Obviously, the company's been growing 20% plus. I think their growth rate will go down a little bit, but not that substantially because the business model is so stable. So 17%.
We're also watching this at 1.5 speed because this is a 43-minute long video, and I don't want to be here all day.
Revenue growth on average per year, right? Net income growth of 20%. I believe they're going to keep costs down immensely over the coming years. So then do net income growth of about 20% per year on average from 2025 to 2028. You could say 28 to a 35 PE would be very.
Again, all these calculations here, right? This net income growth that he's projecting, net income margins, earnings per share, none of that matters. None of it matters. Right? And I keep seeing more and more comments of people like waking up to say, you know what? Fundamentals don't matter. They really don't. Because his projections can say whatever. His price targets can be whatever. But the market's going to do what the market's going to do. And the only way you make money is if the price is going up, right? Because only price pays. I've seen a lot of people start quoting that in the comments, and you can do that too, right? Quote only price pays if you really understand down below that fundamentals just don't, they are meaningless. They're absolutely meaningless, because at the end of the day, is the price going up? Is your horse running down the race, or has it stopped and is it going back in the starting gate? So calculations like this, absolutely meaningless.
Fair for Meta.
Let me rephrase that. Calculations like this help somebody build up a case as to why they should buy something. So to that person, I could see why that's important. But to me, if the price isn't going, I give no shits at what your price target is or what your net income growth is projecting. Who cares? Who really cares? Is price going up? Yes, let's go.
Very fair for Meta, given those sorts of growth rates. So that puts a stock in 2026, somewhere between about $919 and about $1,149. So the moral of the story is in 2026, Meta will likely be $1,000 plus per share. I'd say a pretty high probability of that.
But if it isn't, are you still going to hold it? Are you still going to let it come down? If instead of it being $1,000 a share, if it's down at $300 a share, half of what it is right now, which could happen. Don't get me wrong. Could happen. Are you being risk first? Or are you cool with the 50% drawdown?
Then we can say 2028, the stock's somewhere between $1,300 and $1,600, and that puts Meta on a path to be $2,000 or more by 2030 or before. So I am of the understanding.
Because stocks only go up. Duh. Stocks only go up. And logic like this is what gets people in a lot of trouble in the market, right? My stock should be $1,000 a share by the end of this year and $2,000 a share by the end of next year. So with that logic, I need to mortgage my house and buy as much Meta stock as I possibly can. Please don't do that.
Understanding that Meta stock is likely going to be $2,000 plus in the next, we can call it 4 to 5 years. So if Meta goes down to 500 tomorrow, I don't care because it's on its way to 2,000. If Meta goes up to 7.
God, this logic is so broken. If Meta went down to 500 tomorrow, you're telling me that you are okay with being down 25%. You're okay with losing 25 cents out of every dollar you invested into the stock. And if you're on margin, 50 cents on every dollar, basically. I'm not. No, I'm not at all. But you know what's cool about this? And I like showcasing it this way, right? So imagine that Meta does go down, right? And it hits that $500 level. And then it starts to come back up, right? Oh, that was a bad one right there. Hang on. And it does come back up. Like, let's say it does. Let's say it does. The prudent way to trade this, the risk first way to trade this, is to let it go down, let it do what it's going to do. We'll let it find its bottom. And if you were excited to buy it at $500 a share, let it find its bottom and then start coming back up out of $500. And then that's your buy point. Not as it's going down through 500. A lot of people have been absolutely hosed on AMD because they thought they were geniuses buying at 160, 150, 130, 120, all the way down. Now it's at 115. This is what I was saying with AMD. Let it figure out its bottom. Let it start gaining momentum. Let its strength come back and then buy it. There's no rush to buy any stock ever, especially if it has gone down 25%. I mean, the last thing I want to do is own something that's going down 25%. And I can't even imagine looking 2 years in the future and saying, oh, it's going to double and triple or more by then. You have no idea of that. But to put that sort of price target on there, I think sets people up for a lot of failure because they're not thinking risk first. Risk matters more, so much more than any gain you're ever going to take.
700 tomorrow. I don't care because it's on its way to 2,000. So it's all irrelevant to me, right? And
I have a hand gesture that when I hear people say obvious bullshit, I like to do. I'm not going to do it here, but think of it yourself.
You say the stock's likely on its way to $1,000 in the next 24 months. So once again, if Meta goes on 500 or goes up to 700 tomorrow, it doesn't matter. It's on its way to 1,000 plus over the next 24 months, right? We can say even if we take a much more conservative approach, which I would call this a little more, on the bearish side than kind of what I'm expecting, 14% revenue growth on average for the next number of years, 17% net income growth. You could say the stock's still going to be probably around $1,000 in 2026, right? And it still would be on the path to $2,000 probably in 2030, right? And then we can say we can take a pretty bearish stance here. 11% revenue growth would be bad for Meta over the next number of years. I mean, really bad. So if we did the company at a...
So his bearish case is basically the stock doubling. This is what I get so worked up about. His risk case, his risk first perspective is the stock doubling in value. Give me a freaking break.
11% revenue growth and 14% net income growth. Guess what? The stock would still approach $1,000 a share in 2026. I don't know if it would get there, but it would approach that level. And that's in a bearish scenario. So this is why I have 0% anxiety, worry, stress about what's going to happen tomorrow with Tesla, what's going to happen with Meta. It's irrelevant, man. It's completely irrelevant. Like, it's just going to be fun and entertaining to see it and go over the numbers, and I'll do that for you.
What's irrelevant is every one of your calculations on here. It means absolutely nothing. Only price pays.
You guys on the main channel tomorrow night, right? We're going to have a whole party and a whole great video on the main channel tomorrow night. We'll go in depth on the Meta numbers and the Tesla numbers. We're going to look at everything. We're going to talk about it all, right? It's going to be a lot of fun. But in terms of like, am I nervous? Am I worried? It's irrelevant, man. Because I understand.
Dude, he's clearly nervous. Like, you can tell from his mannerisms. You can tell from his body language. You can tell from his language patterns here. He's nervous as F. He's nervous AF. He's trying to justify if price goes down, it'll be fine. It'll be fine. It'll be fine if price goes down, right? I mean, I'm holding this forever. So if it goes down, then whatever.
Of both those situations. Tesla's, just up and down. It's just what it is, right? And there's a whole lot more ups and downs when you're a Tesla shareholder. And then Meta's it's on its way to 1,000 and then 2,000 anyway. So it's, whatever. They want to send it down tomorrow, send it down. They want to buy it up. Like, it doesn't matter. Whatever happens there because of their numbers, the way their numbers are trending, like $1,000 and $2,000 a share is coming out.
Well, I mean, the stock is absolutely trending higher. Absolutely. And I don't see any sort of overhead resistance for this whatsoever. So I am very bullish on Meta. We did get that buy signal coming through, but just keep in mind, we got earnings coming up and earnings can be a crapshoot either way.
Here very, very soon in regards to that one, right? Alrighty, let's go ahead and pull some reactions here. Start off with Tom Lee.
On this day, what do you make of this?
Well, markets don't like uncertainty. They like visibility. They like moats. So markets are a little scared today. To me, it's an overreaction. I mean, Nvidia decline is the worst since March 2020, and we know that ended up being a huge opportunity for investors. So, it's not a fun day, but I'd be looking at this as an opportunity.
Do I believe the move yesterday was an overreaction? My personal stance is absolutely, I believe it was an overreaction. Like 17%, like I could understand Nvidia getting hit yesterday, right? On the whole comments, and once again, I think it's hard to believe they built that almost $6 million. But let's say they did hypothetically, right? Brad Gerstner actually did a great breakdown on Fast Money tonight on kind of his thoughts on it. You know what? I have Fubo on here. Let me see if I can pull up this Brad Gerstner clip, because I think it's going to give people a lot more of an interesting viewpoint on this from what many would consider an expert on the industry. Alrighty, guys, I found you the clip here on Fast Money. Okay, Brad Gerstner. This is a good little clip here I want to react to. I think you guys get a lot of value out of this.
More GPUs. So again, what happened yesterday? It wasn't a breakthrough on the model. They actually built a model that's kind of where OpenAI was 10 to 12 months ago, the O1 or the O1 preview model. But there was this idea that they did it for a fraction of the cost. And I heard reported all over CNBC yesterday that it was $6 million versus billions of dollars to train O1 or O1 preview. I would say my informed speculation is that the cost of training O1 or O1 preview was less than 20 million. This was not a big price breakthrough. It's actually what you would expect. The cost of compute comes down by about 50% a year. So if it cost OpenAI a year ago to build this model $15 million, you would expect it to cost 7.5. And we know they also use distillation techniques. It's not to take anything away from DeepSeek. I think it's a great thing for the world that we're going to, make this cheaper for everybody. Everybody's going to have access as a consumer. All these enterprises are going to have access.
So that's an important thing to understand about this whole game here and this DeepSeek thing, right? Brad Gerstner is basically saying the model is much more similar to where OpenAI was, maybe a year ago or so, right? And people could debate on that because I have heard this DeepSeek product is pretty high level, but the question is it better than what OpenAI has in the market today? Then that's something that could be debated. But if that's true, then it's not nearly as impressive. If people think like what DeepSeek has today is better than what OpenAI has today, then we're talking about a whole different ballgame, right? Because obviously there's just been a lot of spend that's going into OpenAI. But if it's more competitive to what OpenAI was in the past, then we can say, okay, this isn't as impressive as maybe it sounded initially, right? And so I think this is a phenomenal point Brad Gerstner is bringing up here.
Enterprises are going to have access. It's not just going to come out of places like DeepSeek. Llama is going to one-up them. I imagine there are going to be other companies like OpenAI and Google and others who are going to be open sourcing their lower tier models while they still charge a premium for the frontier.
Right. I mean, your words are. People should listen when you talk. And I'm one of those people. And you mentioned price to earnings is not only reasonable, but given where we've been, it's extraordinarily cheap. But my concern is in terms of Nvidia, they're sort of out earning their revenue. In other words, the margins at 77% suggest that something's got to give at some point. That price to sales number is still, for me, a bit of a sticking point.
That's a great point. Daidami.
It's funny listening to the CNBC folks and Jeremy both talk about this. I forget where I heard it, but it was something along the lines of how all these numbers, price to sales, price to earnings, all the fundamental valuations that you want to throw on whatever, right? They're all basically the story to go along with the move in the stock. Man, I'm going to have to find that because price will move and then they'll have the justification show up later in the fundamentals in some way, right? Because the fundamentals lag. Give me a freaking break. They come out with quarterly numbers, right? Meta's going to come out with quarterly numbers, and you're going to tell me that what they've been doing over the last quarter that they only announce on a single day is everything that you'd ever want to know on the stock. And so the stock will catapult higher up to $2,000 a share because of numbers they release on one day. No way, dude. No way. So I'm gonna have to see if I can find that quote, and we're gonna talk about that more often because really at the end of the day, the fundamental numbers are just justifying the move to go along with the price, right? Because I can't imagine that you're ever gonna find somebody who's like, oh, look at this giant move in Meta. The fundamental numbers, it should be crashing because of this. No, they're gonna be the opposite. They're gonna be like, see, the fundamental numbers are supporting the fact that the price is going up like this. When price is going to do what price is going to do, it's going to trend one way or another based on the human psychology behind everybody saying, oh, I want to buy this or I want to sell this, right? That's just how the market works. So let's rank this video out of 10. See, let's give this a video ranking here. Nobody gets a 7. Put in the comments what you think this video is ranked to you. But I'm going to say a 3. It's not a 1. I'm going to say a 3, just because I get so frustrated when I hear people like this who put their price targets on a stock, which mean nothing. No analyst price target means absolutely anything because the price is either going to trend higher or it's going to trend lower or it's going to go sideways. And they're going to adjust those targets because of that. I'm telling you right now, if Meta had been dropping, right? If Meta had been going down instead of going up during this time, do you really think he's like, well, because it's been going down to 500, right? Like, let's play out that scenario here. Let's say it does go down to $500 here. Do you actually think he's going to come on and say, my price target is still $2,000 a share by the end of the year or next year or whatever it is? I don't think so. But he'll probably come up with even more excuses as to why he should continue to hold it as it's going down. And I don't want you to be in that place, right? Because remember, at the end of the day, only price pays. So do me a favor in the chat, tell me what you are trading. I'd really love to hear. And be sure to come back tomorrow, or I'll help you save time, make money, and start winning with less risk together as a team. And click on one of the recommended videos that YouTube's popping up now. I recommend you watch one of those. Have a great day, and we'll talk soon.